Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. On Friday, I noted that there was bearish divergence for the Australian dollar, and when the market was posting fresh highs and struggled at the 70.35 supply zone, plummeted along with the RSI and also the MACD weakening further. As you can see here, the divergence, where the price is rising and the RSI is lowering, does support the case to the downside. Now tackling the 60-day moving average around 80. Along with that, resistance capping above 70 cents to anywhere from 10 to 35. I do anticipate further weakness, and with a target down to 69.65 to 69.10.35 and reassess from there. Since last week, the call of the bearish outside range day, 3 inside range candles that supported the bear case, followed by a further bear action on Friday, was triggered after the market returned in the US after Independence Day. The non-farm payrolls report that was anticipated very much throughout the week managed to rebound sharply in June, crushing the expectations of 165,000 jobs, and instead added 224,000 jobs for June. This is by far the best number coming out since January. The unemployment rate edged up by 3.7 from 3.6. This still, though, is close to a 50-year low. The average hourly earnings, however, was a disappointment after missing its forecast of 0.03 and coming in at 0.02%. According to the Bureau of Labour Statistics, their figures for now have squashed any concerns that the employment picture and the overall growth picture was becoming a little bit to the weaker side. The point now is, at the end of the month, we do have the Federal Open Market Committee, or the FOMC, 2-day rate decision. It is anticipated from last week 100% priced in, but now dropping back to about 80-90 due to those figures released on Friday. Nevertheless, let's see how the market plays out, because later this week we do have the FOMC minutes, and also we do have Jerome Powell speaking this week as well. So looking at the technical target, that is 112.05 to 111.60 still on the cards. Any advances, 112.65 should cap in the short term. Well, with the dollar strengthening quite significantly, the market is now pressuring this level of 108.40.60. Still struggling to break above this level. As you can see, over the last few weeks, it has struggled and therefore may again. But if we get a break, then this will give scope up towards 109.25 or even to 109.75.85, with the base temporarily on the day around 107.80 to 107.25. The pound reaches its target of 125 on Friday, but still not rebounding. It is getting a little bit concerning that we're oversold, but nevertheless the trend is strong with the ADX, and the MACD is also posting a further threat to the downside, and therefore could see a move if we go sub 124.70 down to 123.50.70 as a target. Resistance seen at 125.55 at the moment. Well, after the figures on Friday, gold plummeted from the range of 1,424 down to a low of 1,387. With the outlook now of a possible rate cut reversing from 100% priced in to 80% now for the US Fed, it is now questionable to how the market will play out for gold. At the present, though, the base is coming in around 78.83, but a break beneath there would confirm this double top and may see a move down to 35. Quite a significant move, so do keep that in play in terms of how you trade your risk management, because we likely, from a technical point, we'll see pressure towards the downside into the coming week as the market progresses on and waits for the Fed announcement on the 30th to the 31st when the meeting starts. The other factor as well this week that the market will be keeping a very close watch on is that we have the FOMC meeting minutes on Wednesday, and also the Fed Chairman Powell testifies to Congress. These will be the main drivers, so do keep an eye out for them. Resistance for gold at the moment is at 1,404 to 1,412. Intraday support is at 94.87 and with a base at 78.83. And wrapping up with oil, it's still mixed due to the fact is we've got a flag and an outside range day to the bull case. But the indicators are giving little away for direction. So it's now a tug of war between the two bulls and bears and see who actually wins out. At present, though, the flag is a little bit stronger because this is a weak bullish outside range day. So we may see the market fall back to 55. But as I mentioned, I am neutral at this stage. Well, that wraps up for today. Thank you very much for joining me. And as always, look out for the intraday report and hope you enjoy the great start to this new week.